Now, the one thing I want to do first is go over the scanner in multi-charts because it's pretty powerful this morning. You can see just about everything is red with the exception of the S&P 500, the Dow, and the Nasdaq. And you've got some mixed colors in there. What's more important today that I see on the scanner is you have extremely high ADX values on some of these. For example, the British pound's at 75. You've got the Canadian dollar at 72, and you've got long divergence here. Plus, on the 180, the 720, and the 1440, they're all getting to the oversold areas. Okay. Same thing on the Aussie. When you're looking at the 720, is at 69. The 45 is at 69. Um, the euro is at 69 on the 45 minute, but on the 1440, it is at 74. We have had a magenta peak on crude this morning. Okay. It's 135 ticks away from that ATR, but pretty much looks like a down day. Okay. Now they are having an emergency Euro summit regarding the Greece crisis. So that is something you really need to watch out for today. They're going to decide, I guess, if they come to a resolution, um, whether they give Greece more money or not. And of course, if Greece doesn't get money, they're really in trouble, and it's affecting all of the markets. Okay, and I want to make sure that you understand that. Now, if you're looking at the RSI column, you've got crude. Well, of course, it is oversold at 59, so you would anticipate a pullback on crude. You could also anticipate a pullback on the British pound. Those are the only two that I see that are either above 50 or below negative 50. The Canadian dollar is right at the point of being oversold. Not quite there yet. Now, I know some of you may get excited and jump in the market in the opposite direction. I don't suggest you do that unless the chart proves to you that it's going to go up. If you try to go long right now, you are fighting some really powerful downward movement. Does everyone understand that? And you really don't want to do that. Okay. Now, on gold right now, you're kind of testing this congestion dot here. Okay. And I'm going to bring over the one chart that I have that has volume on it so we can actually analyze the volume. And you can see this one as it's making these new lows. Actually, the volume was increasing. Now, on this last bar here, you can barely see that it's red, but it actually is. There was absolutely no volume. That is not confirmed. Okay. So do not start taking this to the upside because you do not have confirmed volume divergence. If you are going against a trade direction, a trend direction, you want to make sure that you're using confirmed volume divergence. Okay? Do not jump in this just because you have that potential there. As far as I'm concerned, until I get confirmed volume divergence, the only position to take would be to the short side. Any questions on that? Don't fight the trend. I love counter trend trading. Okay. I love it. but you had better have that confirmed volume divergence to counter trend trade. Okay? Extremely important. All right, we're going to look at crude. Crude is coming up to this green line. Now, what I have done, just so I don't have so many lines on my chart, is I have put the congestion zones on here. I did 90 days back and I did the 180, the 720, and the 1440. Colors stayed the same. The green is the 180, red is the 1440, the gold is the 720. Okay. Now, because I'm loading 90 days worth of data, I'm not putting any other indicators other than the trend ATR. Okay. I just keep a separate chart window that actually has the volume on it. Okay. And this way I don't overwhelm my memory. Okay. And then I can just scroll through using the little link up here to change it. Now, right now, you can see that as this came back, it flipped the ATR. What do we expect when the ATR is flipped? We expect it to go back and test for resistance. In other words, for price to continue moving down, it needs to find an area that is going to resist price. Okay. So even though they flip the support area here, they will come back and they will test to make sure that there is an area that acts as resistance to continue moving price down. Where would I anticipate the test of the ATR? Looking at this 45-minute chart, I would anticipate them to come to the green line and then come back and test the ATR. Okay. If they do that, and if it is on the verging buying volume, you would have a low risk entry as long as you're still around the ATR area. Does everybody understand that? Now, if it comes down to this green line, then it retraces back up. It's going to be a couple of hours, I'll tell you that right now. Where will it go after that? Well, it's going to probably come back to the green line, and we have nothing beneath that. Okay. So the potential is for it to continue down. Okay. Any questions on that one? Let's go look at the Dow. Now in the Dow, you can see that it came back to test these green lines here. Okay. And as it did that, do y'all see all of this volume divergence here? Do you see how the sellers stepped in on that bar as it made the high? Sellers stepped in. Okay. That's what we call single bar divergence. It's confirmed at the end of that bar because it closed on the low. Now it has flipped the ATR. Okay. We did not have a congestion dot form. Okay. So I'm expecting this. It may go down a little bit more, but then I would expect it to actually test that ATR. Everybody understand that? Any questions on that so far? I've got to put that to. So There's where your congestion dot is. I didn't have the indicator set right. Yeah, it's because I didn't have it set to update intrabar. So I would expect the Dow to at least come down to 629, and then it will go back and test the ATR at 722. Again, you would want to see volume divergence as it goes back to test that ATR. Does everybody understand that? Now, there's no lines beneath it, okay? And that means that once it goes back and it tests this ATR, you know it should at least come down to 628. More than likely, it will break that area, okay? And then there's nothing there. You're just going to have to wait until it actually forms an area of support. Right now, I'm not seeing any area that would support a price movement up other than the 627 area. Okay. Now, over on the NASDAQ, you're seeing pretty much the same thing. You just formed a congestion dot. Now, they may reach down to this green line, okay, but they will come back and they will test the ATR. That is where I would look for an entry, okay? Now, the difference on the NASDAQ is you do have the 4,400 area with the red line. Don't have it over here on the Dow. You do have it over on the NASDAQ. So it could come down, test this congestion dot, go back and test the ATR. Then my expectation would be the 4,400 area. Okay. Now, over on the ES, again, you have all this overhead resistance, not been able to break through it. I do think it will come down to the congestion dot. I think it will come back and test the ATR. Guess what we need? Diverging volume as it tests that ATR. Does everybody understand that? Now, if you're really aggressive, okay, there is a potential scalp on all three of these markets if it comes down to the congestion dot. If you see volume divergence on the seller side, you could potentially trade that back to the ATR. Keep a very tight stop on it. Okay? Does everybody understand that? What do I mean by keep a tight stop? Anybody want to venture a guess? You were just going to ask that. All right. Well, it's a little bit more than that. Okay. And all right, let's do the NASDAQ because the NASDAQ is actually touching it right now. I'm going to do this in simulator mode. Okay. Um, well, I'll tell you what. Instead of doing that, we'll just transfer this one to the NASDAQ. Okay, what time? That ends at 8:15. Tell you what, let me go down to a 3 minute and I'll show you what I'm talking about. We're gonna let this 3 minute bar end. Well, actually I had single bar. All right, I'm gonna go ahead and go in, and this is just to show you it's in a simulator, okay? So I don't want anyone to be confused. Yeah, it just started. So I'm going to just do 2 contracts in Simulator to show you how to do this. Okay. So we have single bar divergence here. You should have actually been in at the open, but we're a little bit late. All right. What are we anticipating? We're anticipating it to go up to the ATR, okay? But we also have single bar divergence. What does single bar divergence tell us? Expect a test for buyers, correct? All right. If we're expecting a test for buyers, if this goes to 44.21, I would exit. And I'm just going to put a line on there so you know. 44.21. There's your line. And I'm going to make that red so everybody knows it would be a stop. Brown's good. Now, I'm expecting it to at least go, as it stands right now, it should go above this, which would make it about 427. Okay. So that's about 2.5 points, right? Buyers are still stepping in. That's what we would still anticipate as it stands. Right now, we have a gray volume bar. Okay. Gray volume bar would just confirm what we were already seeing. Okay. I'm okay with that. And just while we're waiting on this, do you see how this chart's got gaps on it? Okay. It closed here, opened here, closed here, opened here. This is when you do not want to trade this 3-minute chart. I'm doing it to show you what I mean by tight stop. Okay. But I'm telling you right now, in your live account, if you open up a chart and you see gaps like that, bump it up a time frame. That means if you're looking at a 3-minute, you go to a 12-minute. 12 minutes got gaps. What do? You go to a 45-minute. Y'all understand that? Do not forget that. I have a congestion dot level on the 180 NASDAQ. Um, I have to look at it. Give me a minute. Now, so far, everything is okay. We're getting the gray volume bar. That's fine. No problem there. Okay. That's what we would anticipate it to do because it's just giving us confirmation of the single bar divergence. Everybody still understanding this? All right, now I'm going to raise my stop, and my stop is going to be here. This is what I mean by keeping a tight stop. And why would I do that? Anybody want to venture a guess? Because it shouldn't take out that low. Does everybody understand that? Okay. Now, this is the 180 chart. Okay. Now, the 180 is actually telling me it should come back to this ATR. So this trade at this moment is against the 180-minute chart. Viewer 1. You would see single bar divergence on the lower time frame when magenta peaks and anticipated retracement to the ATR. Uh, on the 180 viewer 4, on this one, all right. Do you see how the sellers are stepping in on this bar? Should it do that? Should that happen? This bar has got maybe 30 seconds left. If that continues, I'm moving my stop way up because that should not happen. I'll probably close the position. If it continues below zero, that's it. I'm out. Do y'all understand that? That's what I mean by you keep it tight. That right there should not have happened. I will scratch that trade so fast it will make your head spin. Understand? You are counter trend trading. If I will scratch a trade in a heartbeat if the volume comes up and says nope, ain't gonna happen. Do you understand that? I can't really say a down day, okay? And the reason that I can't, this bar is going to end at, I believe it's 9 o'clock. Yep, 9 o'clock. Okay. The next bar can actually come down because this ATR is going to pull up. All right. So you could get an opening bar, okay, comes down, touches this, and then shoots straight back up. So I'm very cautious when you're using the word day, okay? Because, with the U.S. market opening, it can happen in one bar. Understand? Any questions on that, guys? That's what I mean by when I say keep it tight, I mean keep it tight because you are counter trend trading. All right. Let's go down to the Aussie. I always consider time impossible movement. If that was London session, yeah, it's probably the London day session is probably going to be a down day because you're not going to get that big of movement typically. Dave, just about all of them did. Just about all of them. And I just got rid of my chart. So, I mean, there was just beautiful, beautiful trades. Hold on just a minute, guys. Um, I got rid of my chart and I didn't realize what I was doing, evidently. 10. Let me get my 45-minute chart up um, with the indicators back on it because I mean you've had some really nice trades on the currencies, um, and all of them at the ATR, every one of them. Let's put this one up here. Calculate. I haven't put all of my templates on this new computer, so it takes me a while to do this. Just give me a minute. Yeah, you were for. Let me save this right quick, guys. You actually had two entries. Depending on Dave. God. You actually had a lot of entries, but we're gonna mark them on here. Okay. You had an entry here. Do you see that divergence there? Um, that came in at 12:45. Okay. Then you had another entry. You could have went in there or there, either one. So you had a 130 and a 215 entry. Yeah, when you get those flat ones like these, you had a flat one here and a flat one here. They're going to retest that low. Usually that's what happens. I'll put it that way. Um, Now that was on the Aussie. If you get a magenta peak and it retraces back to the ATR, again, all you have to do is look for the volume divergence. Okay. Let's go to the next one, which is the British pound. Okay. To me, that is not buyers in that market. Okay. I mean, there's no way there was buyers in that market. Not with that itty bitty thing at 2:15 in the morning. Um, to me, that would have been an entry. Let's go and look at the Canadian. Okay, on the Canadian, you have an entry right there. Do y'all see that volume divergence from here to here? You had another entry over here. Absolutely no buyers in that market whatsoever. I mean, really, if somebody bought the volume indicator with the trend ATR, it paid for it just this morning itself. I mean, just fantastic trades. You just had to know which ones were moving. That's it. Um, this is the one that I sent out this morning. Okay. Do you see the volume divergence here? Also had volume divergence here. You know, just really exceptional trades this morning. Yeah. You had one here. And I mean, these are from 45-minute charts. Hell, you can go eat dinner before the next bar forms, you know? It's not something you have to be, oh. You don't. You literally got 45 minutes, okay? And I mean, it's broken through this area of um, support. The next area down here at 0920. Dinner, breakfast, just depends on what country you're living in. Okay. Is there anybody that doesn't understand these setups? I mean, to me, these are pretty simple setups. And they're, that one on the euro, it was over 100 pips. That's $1,250 on one contract. Okay. Um, let's go look at the Swiss franc. You just you can't say that you don't have entries. Okay. You just can't say that because you do. Um, there's no volume divergence there. I don't think that really actually came close enough. Well, yeah, it was within 10 ticks. I just don't see an entry on the Swiss franc. I don't like to make up entries. So let's go back to the Dow now, real quick, because it looks like you're probably getting divergence. No, it hasn't taken out the. It hasn't taken out that low right there. I would want this bar to tick one tick lower. Go back and look at the NASDAQ now on this one. Now this one, I know it has taken out that low, but again, you still have another 10 minutes on this one. Would I re-enter this and keep a tight stop? Oh yeah, you know I would. Let's see about the ES. The ES is, you know, the crappiest market out there, but we'll look at it anyway. The most important thing to remember on that one, keep that tight stop. So between here and here, you are getting volume divergence. Okay. With this being at a congestion dot, I want to make sure everybody hears me on this one because this is at a congestion dot. Do I need confirmed divergence? The trick question, isn't it? Not really. If you're at an ATR or you are at a congestion dot, those are support and resistance levels. You do not have to have the confirmed divergence. That's right. ATR or congestion dot is potential divergence. Okay. Over here on the euro, you're in the middle of nowhere. Okay. You better have confirmed divergence. But this is not that case. Okay. Could you do this one back to the ATR? You know, and this gets a little bit more complicated because you do want to make sure you have what? A 1 to 2 risk to reward ratio to enter that trade. So, in other words, if you're entering up here at 2075 and you're 2 points away, guess what? You shouldn't be in that trade because you don't have the potential. Do you understand that? Um, do you have your alerts via email or on those currencies you were in front of the computer monitoring? I monitor on the radar screen just about 24 hours a day. Because at the ATR and CD, they provide low risk entries or the best place for a trade in horse theory, room to run. That's right. And see, just at a glance here, and again, I'm doing this in a simulator. It's just to show you um, how I would do this. Okay. There's 5 minutes left in this bar. Okay. So if you're looking at this, you're saying 2069. Your stop is going to be down here at, I would say, 2065. Okay. So that's 4 points. There's an 8 point potential. Do y'all see that? So, all right. The first thing I would do is come down here and put in a stop and make sure it's two. Gotta take that off. That just aggravates me. All right. Now I need to space this out so I can see what I'm doing and come up here to 2077 and put in a sell limit. Okay. Now your orders are in. Okay. And you can see you've got strong volume divergence here. You're about 5 minutes early. Okay. But you do know that the next bar, as it stands right now, should take out the high, correct? Is everybody with me so far? Now, the next thing I do is I set my little cursor right here at the close, okay? Because I will close it in a heartbeat. And what am I focused on? I'm focused on that volume. Do y'all understand this? Yes, no, maybe. All right. Yes, no, and maybe. Okay. And all we're doing is actually using the volume to guide us in this trade. Okay. The volume is telling us this should go up. We know it's at a congestion dot, so more than likely it's going to go right back up here and test this area to make sure there is resistance to push price down again. And I'm not using my higher time frames, okay? I'm doing this just to show you what I mean by keeping a tight stop. The previous bar wasn't. The current bar is the lowest low. This is red. This is a red volume bar that tells me that this is divergence. Okay? Do you see that, Larry? So if I'm connecting the lows, this is what it looks like. That is standard divergence. Sellers are drying up. You're on the lows. Now, that volume right now tells me they should take out, well, at least come up to here, which is 2071. Why? Because they need to test for buyers. That would be a minimum. It would go to 2071. Right now, it's a gray bar. The gray bar just confirms volume divergence. Is everybody with me so far? When price breaks the congestion dot, at what moment do you determine that it will not test the ATR and it will continue? It will go back and test the ATR. Um, Go over here to crude. Do you see how crude went down? It's come to this green line, which is what I anticipated earlier today. Okay. This is the point where I would anticipate it to come back to here. What would I need to look at? I would need to look at the volume. Now we're setting 4 ticks off of this congestion dot right now. Does that answer your question, viewer one? If you look over on gold, do you see how it broke and then it came back? And do you see this double zone here? Now it's come back and it broke that. I would be anticipating a test of that. Normally, it's a magenta peak that causes that to happen. Normally. We don't always have it that way. Normally, it does so. Because it said viewer one in my screen. Oh, that's why. And see, on this one, I really do want to see buyers come in on that bar. Get rid of those lines. These ATRs and congestion dots, let's say that the 180 was at an ATR that was below price, that would give it a lot of momentum to the upside, especially if I had divergence at the ATR and the 180. Let's say the 3 minute had a magenta peak that's going to push it back up. Those are things that I would consider, on my other time frames. Congestion data on gold's really giving them some trouble there. I'm going to run and get a cup of coffee, and I'll be right back. The stop is at 2065. Okay, we're on a 45-minute chart. I know I got time to run and grab a cup of coffee. Does everybody understand that? Well, I love my 45-minute chart. But I'll be right back, okay, guys? Okay, I'm back. Looks like I didn't miss nothing, too. Hmm. Okay, we're going to have to pull this down a little bit. Why did I pull that down? Any guesses? Because the ATR moved down. Does everybody understand that? Yeah, I pulled down the target. The ATR moved down, so I pulled down the target. The Swiss franc over here, the ADX is at 70. On the Aussie, it's 73. On the Canadian, it is. This is the Canadian. It is at 77. The British pound is at 79, and the euro is at 75. So I think we will have retracements. What time they will come in, I don't know. I'm just making small talk while we're waiting here. I like doing training like this, Dave. I don't like doing it in the free live trading room because you people will come in there that have no idea what they're doing and try to trade with you, and I hate that. I like doing it in the annual members room though. Well, I think it reinforces it too. When I work with my mentoring clients, Dave, I make them take trades like this, but they have to record it and talk me through the trade and how they're reading it. And you'll be surprised at what comes out. You really will. You know, I had a client, I mean, he nailed what the Dow was going to do yesterday. He nailed it. 45-minute chart, going to retrace back to the ATR, and then it should go up. And that's exactly what it did. The problem is when he went to his 3-minute chart, he just kind of threw out what he had just said the analysis was and went ahead and went long before it reached the ATR. You know, and we do this in simulator mode when I mentor students, and he had a loss because, and this is what I say over and over and over again. That 3-minute chart is like a mistress. Don't even look at it until you know the trade is setting up on the higher time frame. Yeah, and then they have to send them to me, and I get the privilege of telling them what they did wrong. But I have it on video, okay? So it's not like, well, no, that's not what I meant. Yeah, it's right here on the video. See, right here, this point on the video. And I'm pretty harsh too. I know I am, but I know that if I'm harsh with you, you'll remember it. It's sort of like a drill sergeant. Drill sergeant gets in my son's face, he will never do that again. That's right. Say yes, ma'am. I did deserve that loss. Well, your trading improves when you do it, Dave. It's, and I realize one of the problems is, you go back and you do a great analysis and then you go down to 3 minute and you throw everything you learned out the window, you know, that stops that behavior. And I just review the videos during the day in between trading or whatever I'm doing. Sometimes it's immediate, sometimes it might be 2 or 3 hours later, depending on what I'm doing. But you begin to see what you're doing wrong. And because you can see it, you can stop it. If you look over at the Swiss franc, should you be trading the Swiss franc 45-minute chart? No, it's gaps in it. This 45-minute chart and it's got gaps in it. Okay. And when it has gaps, if you see gaps on that chart, just between bar to bar, not just like a Sunday gap that we've seen for the last 2 Sundays. I'm talking about, from a 45-minute bar to a 45-minute bar. You're seeing gaps. That chart's trying to tell you, do not trade me because I am noisy. And what happens when you get into a lot of noise? Oh, that's right. I lose money. Do I want to do that? Not really. Okay, bump it up. And see, one of the problems, and this is why I did that market volatility report, okay? We're in the slowest period of the year, not the month, not the week, the year, okay? Even with the whole Greek crisis going on, we are in the slowest period of the year in the markets. Okay? That's the reason you see my focus is predominantly on the 45-minute chart. When it's slow, I bump it up. When it's fast, I take it down. Come October, I'll be using 3 minutes again. Come January, I'll be using 3 minutes. Come April, I'm probably going up to a 12-minute. Do y'all understand that now? And this is why a lot of traders don't realize they might have a great methodology, but the markets change. Okay? They don't always trade the same. So you have to know, where am I in the stages of a market? Well, that's true, Dave. And I even have now for Ninja Trader, which I haven't publicized it, but I have the indicator now that will actually send you an alert for Ninja Trader in an email or visual or whatever. I really don't want to advertise it until we get to Ninja Trader 8. And that's really why. Yeah, it will do it on a chart as well as the market analyzer. I think I haven't really tested it that thoroughly. I have seen with all the screen time that, as my buddy in the open pit used to say, today is a moving day, i.e., 3 days of nothing and then a movement day. But you can see that in the lower time frame charts also. 3 hours of nothing, and then we get one or two moves that are the whole day during the slow time. That's true. And normally, what happens is you're trying to force it to move within a your specified trading time. The market doesn't do that. The market moves whenever the hell it wants to move. I've seen the market open at 9:30 with nothing. I mean, nothing. And then at 11:30 take off like a bat out of hell. It moves when it wants to. And if you're a trader that, well, I'm only going to trade from 8 to 10 o'clock, well, you have to be able just to sit on your hands from 8 to 10 o'clock because it didn't move. And that's hard to do. Extremely hard to do. Yep. Stupid shows up and forces things. That's exactly right. Well, one of the reasons that I write articles and all this other stuff, Dave, is because it replaces stupid. Because, literally I'll glance at the scanner and say, maybe there's one here. I'll look over on it. But in general, I'm not even looking at a lower time frame until I see it on my higher time frame. And if I don't have nothing else to do, I'll be watching movies. And see, this is what I'm talking about, okay? Right now. Excuse me. All right. Do you see the British pound is getting long divergence? Okay. This would tell me, hey, I need to go look at that. You see 720 long divergence. I know that's there, but I would anticipate it here first. Do y'all understand that? And that's just a way of saying, okay, the British pound, which is right here, is showing volume divergence. Now, I don't have the volume on there, but we know that that's the way it is. Okay. Now, if I'm going to be real conservative, what am I going to do? I'm going to come over here to a 3-minute chart. Yeah, we're going to make this a 3. All right. In order for that magenta peak to play out and that retracement to occur, what's got to happen? Okay. Got to flip this ATR. Okay. And then it's going to have to come back and test that ATR. It's nowhere near that. Okay. So I'm just going to drag that off on one of my other screens and I'm going to leave it there so I can glance at it. And, you could even add, it would not make a difference to add the ADX. I can't do the volume, but I can do the ADX. So I'm going to add the ADX here. And this is why sometimes you'll see some of my charts have ADX and some of them don't. Okay, so I know I need to watch that. Okay, that's what that means to me. Now, notice that I don't have the 3 minute in my face. Okay, I've got it off on another screen. Wish I knew what I was doing here. Here we go. I hate these labels. That's the reason I take them off. Takes my focus off my chart. So, all right. So I've got the ADX here. I'm waiting on the magenta peak. You really, really want to get technical about it. I can add a line here. Probably right about here, you're going to get a magenta peak. So you can even put, I believe, an alert on this in NinjaTrader. No, you can't. You can in the new one. But I know if it comes up to here, more than likely, I'm going to get a magenta peak. And if you want to really get technical, you can set it to fuchsia, which means magenta peak. And say OK. There. That tells me, okay, I'm looking for a magenta peak. It's going to have to get to here first. I've already got the 3 minute up. Okay. Does everybody understand that? That just keeps me focused. You could do the same thing on the euro. You could do the same thing on the Swissy, the Aussie, the Canadian. I mean, they're all potentially going to set up. And all I have to do is update that magenta line there on each new bar. Does everybody understand how I did that? And that just, again, it keeps my focus where my focus needs to be. $8.30 trade balance came out. Gold didn't like whatever it said. Let's see what the trade balance came out as. Came in at negative 3 point. No, that was the Canadian. The US dollar came in at negative 41.9 billion. They expected negative 42.5 billion. see if the Canadian moved off of it. Canadian didn't move. I don't think. Nope. Now on the euro, this bar does not finish until 9 o'clock. Okay. But I guarantee you are overextended on the ADX. You are on the Swiss franc too. And again, it's taking the same concept that I just explained on the British pound. The only difference is the British pound actually is registering volume divergence in the scanner. Now, as it stands right now, it would have to retrace all the way to probably this green line. If this finishes at 9 o'clock, you would offset the high of this bar. So I'm going to set it here. And again, just make it magenta or some pink color. And we'll put it at 4, which is thicker than our other lines. Set it as a default for right now. So I know if it exceeds that on the next 45-minute bar, you're probably going to get a magenta peak. Same thing over here on the Swissy. Okay? All you do is offset it. And I would say put it about here. You want to offset it enough where it really makes a difference, because that's when you're going to get your magenta peaks in. ADX. Now the ADX you can have on these charts, and it doesn't take a lot of memory. The volume is the one that takes a lot of memory. Okay? Just so y'all know. You could do the same thing for the Canadian. The Canadian is a little bit more slow moving, so you don't see me do that one as much. The one that I like more than any of them probably is the Euro, with the exception of the Greece issue, but it almost looks like they might reach a deal on that. Does everybody understand that? It's trade beyond. And the reason that is, and this is, again, very important that y'all understand, the as the bar is forming, whatever the current price is considered the close. It doesn't know, okay, wait until 9:15 or 9 o'clock or whatever until the close to really mark it. Okay. I like to know ahead of time. If you're looking at the British pound 3 minute, do you see how it just made this higher low here? Okay. This is probably where it's going to go up and try to flip that ATR. Okay. I know that is just a lot of hours of watching it. It's sort of like a precursor, I guess. you would say. And sometimes they'll fail, so you need to wait for your setup. Yeah, the bar really doesn't know. So what it does is it takes the current price and it uses that as the close. That's the reason you'll see a magenta peak form and then go flat, because let's say it just comes up and touches this and maybe goes up to here and then it starts back down. That's going to be a flat magenta peak. I don't trade treasuries. It's a mathematical issue for me because it does fractions and I hate fractions. Mika does a lot of treasuries. He doesn't mind the fractions. I hate fractions with a passion. Yeah, Mika does a lot. He does well, the bonds. He does soybeans. I just don't like anything that ends in a fraction. Screws with my head. Yeah, Rick does a lot of bonds. He does the options on the bonds. And do y'all see how this volume is drying up on the British pound? It's also drying up on the euro. I mean, it's very evident that sellers are drying up. You still have to wait for this ATR to flip. And I'll show you why. You're not seeing buyers coming in. Do y'all see that? Now, it doesn't look like there's any sellers, but it's going to be easier for this market to go down on diverging selling volume than for it to go up when there are no buyers. Do y'all see that? Just letting you know. It's just not the right time yet. Normally, you'll see the buyers actually start to come into the market. Okay? If they're not coming in, don't do it. I'm telling you, don't do it. Yeah, go with the flow of the market because those buyers have got to step in to push that up. I don't have to minimize this. Currency is going to move today. Um, on the Canadian, I'm sorry. Remember, it's oversold as well. The Canadian is actually getting pretty close to it. Okay. And again, and look, um, I'm sorry. They're starting to set this up. You're gonna get it on the Aussie probably too. Uh, Canadian. Sorry. This is what I would anticipate. Okay. And this is on the Canadian. Now the thing with the Canadian, I know I already tell you, with this line here and that ATR at 78.73, you don't have enough room there for profits. Do y'all understand that? Yes, no, maybe. Come on, guys. Do you see there's not enough room there for profits? Then I just delete it. Okay? I'm not trading that. You know, if you look at the Aussie, you got 73.92 to 74.27. Okay, that's basically 30 pips. Okay, you can't trade that. Let's put the ADX on this one because I would think that the ADX might be magenta. Ew. I'm just going to show you something while we're waiting on this one that we did. All right, do you see how the buyers started to come in here? Okay. Do you see how the sellers were in here? And there was more volume than it was on here? Do y'all see that? Am I trading this? No, I'm just watching it. That one stopped out. All right, so that's a different type of divergence, okay? Now I'm expecting to see this ATR. I want buyers to increase, okay? I want them to flip this ATR and then it will come back and test that ATR, okay? Do y'all understand that? You're seeing the same thing over here. Buyers are starting to increase, okay? From here to here, there was volume divergence even though it made a lower low. What do I need to see? I need to see buyers start to increase. So far, you're not seeing it. Do y'all understand that? Oop, I'm about to take that one off. There. I'm not going to exit it this time. There. Now, am I expecting magenta peaks? Yes. Are they in yet? No. Any chance for a trade yet? No. Y'all understand that? All right. Any questions this morning, guys? And I mean, on the ES, there was no way to raise that stop. The volume kept telling us it was going to go up. There was no way to raise it. Okay. Any other questions today, guys? All right. That's it for today. I'll see you tomorrow, same time, same place, guys.